Hello, good afternoon, everyone. Just doing a quick sound check. Can someone just type in the chat if they can hear me okay? No, must be talking to myself.
I can hear you, man. So yeah.
Oh, yes. Thank you. Thanks, Eswat. Thanks, Michael. Thanks, Matthew. I'll give everyone another maybe 20 or 30 seconds or so just to get online, and we'll jump into it. Okay, it's been a couple of minutes past, so we'll get going. Good afternoon, everyone. Thanks for joining today. Great to see a lot of familiar faces online and on this session. Look, today, I just realized I've got the wrong slides, actually, which is funny. Bear with me for one moment and I will fix that. But today we're joined by Jimmy Vith. He's a full service options advisor over at Point Capital. Hi, Jimmy.
G'day, guys. How are we?
As I'm getting these slides together, I thought I knew how to use this system. I'm a millennial. I should know how technology works. But that's okay. Today is looking at what's happening in the market. It is an interesting time in the market at the moment. I guess, you can make that case for all times in the market. But specifically at the moment, it's a bit of a quiet time, right? Because we've had earnings season come through, and not a lot of information is expected to flow through from the businesses over the next period of time, and the market's been pretty choppy, is what we're seeing as well. So there's a lot to cover. We've got Jimmy on today, so use him to your advantage while we've got him for the next hour or so. A few housekeeping rules as well today. We'd love this session to be interactive, right? So I've created a poll. So on your screen, if you go to the right-hand side, you should be able to click polls and vote for the stocks that you'd like to see covered on the session today. So please do that and spend some time doing that if you can. And we'll get to maybe 3 or 4 stocks today, Jimmy, do a deep dive around what's been happening on those stocks and potentially look at some trades.
Correct, yeah. Find a trade.
So that should be exciting as well. I'm going to scrap the presentation because I can't get onto that. So sorry, there wasn't too much on there, to be honest. Look, bit of housekeeping as well. Obviously, here we provide general advice, so none of this information considers your personal circumstances. You should decide whether any of it's appropriate for you. Past returns are no indication of future returns. This session is for educational purposes only, as well as options can be risky. So if you're new to options, I know a lot of the people online today are active traders with us, but if you're new to options, make sure you spend some time understanding options, understanding the risks as well, and learning them before you trade. They can be highly leveraged products and extremely risky if you don't know what you're doing. So by all means, come along to these sessions. We can help teach you. Use the education center on the website. Create a simulated account and practice those trades as well when you can. Okay, I think I'm over my technical difficulties now, and I've got the website up and running. Jimmy, first of all, I wanted to pick your brains on the XJO. It's been an interesting time, right? We've had such a bullish run from October, November last year.
Yep.
The market's been expecting interest rate cuts as inflation has settled. We've had a big run, and we've hit all-time highs in the last couple of weeks as well. I guess the market's fallen off a little bit over the last week or two, which is interesting to see. But what do you make of where the XJO and the Aussie market's sitting at the moment?
Yeah, you brought it up in one as well, Blake, as well. So pretty much, obviously, the market is expecting rate cuts going forward as well. So all indication is that the Fed will start cutting in June. So May sort of June sort of period, okay, and Australia will probably start in the periods of around September to November as well. So that's where it's at now. Look, the two things that you got to keep an eye on, guys, as well. So obviously long term as well and short term as well. The market is obviously always nervous about inflation numbers. Okay with that? So everything else is pretty much a noise at the moment. Okay, it's all about inflation. So last night we had the PPI, which is a sort of another sort of part of an inflation. Okay, came in a bit higher as well. So as soon as the market sees a higher number, they get a bit nervous as well about interest rate cuts. So that's why we're seeing today, obviously, a bit of bloodbath as well out there as well.
Yeah, absolutely. I've definitely noticed in the market, Jimmy, that volume dies down the days leading up to RBA announcements,
Correct. Yep.
interest rate decisions, and the changes in inflation.
Yeah, correct.
So it feels.
Yeah. So the two things that you've got to keep an eye on is, as Blake sort of pointed out, your central banks, okay, obviously interest rate decisions are critical, okay, when the Fed comes out or the RBA. Europe is sort of a little bit bigger as well, but everyone sort of knows Europe's a bit different, okay. But the US and Australia, obviously, because we're here as well, is big news. And as Blake said as well, the volume does fall off a bit prior to those sort of announcements, and then it picks up again. And then obviously CPI number as well is very critical as well. So we had our CPI print out of the US as well. That came in a little bit higher as well, but it just sort of depends how they want to spin it as well on the long term sort of stuff as well. So that's where it's at.
Yeah, absolutely. And I've definitely seen the market super sensitive to the macroeconomic factors. The times where the inflation number hasn't been on target, or reading the meeting minutes from the RBA has played a big effect on the way the market's been trading. I mean, even yesterday I was reading that Macquarie, their analyst desk, downgraded their price targets of the big four banks. And obviously we know what happened yesterday towards the latter half of the day with them falling all, up to 3%, which isn't a normal environment, right? Like a piece of information like that affecting the market so heavily means that, well, it seems to me that investors are very on edge and very reactive to the external factors.
Correct as well. They're pretty much, obviously, the market wants interest rate cuts as well coming out of the banks. So if that happens as well, that should be a positive for the banks. The issue you got, obviously, as soon as an inflation number comes a little bit higher, the market sort of, as Blake sort of said as well, it does get a bit nervous as well. The other sort of step is, obviously, we saw their reporting. Reporting was great. No bad debts as well. But if they don't get interest rate cuts as well, I think, look, personally, right now, some of the banks are way overvalued. Okay. So you're probably seeing a bit of a correction here as well on some of them. But look, it just comes down to what happens next as well. So because the next bit of news that we've got next week is your RBA announcement. They moved it from the first Tuesday of every month to mid-month, okay, to coincide similar to what the Fed's doing as well. So it's sort of like a 2-day sort of thing. And pretty much, obviously, they'll have a speech later on. But let's say if the RBA changes its tune on interest rate cuts as well, because they've been sort of talking it up that they're going to raise rates. The market hasn't believed them. Okay. So if they sort of show a sign that they've changed their tune, that they might start cutting, you'll see this market sort of start pushing back up as well. So that's where it's at. So, yeah.
Yeah, no, absolutely. Look, there's a couple of other things to cover, but I'll just remind everyone that's online today. Make sure jump into the polls as we're speaking this morning, or well, early in the session. It's afternoon now, and pick the stock you'd like to see covered. We'll get through 3 or 4 today. If there's any stock on that poll that's or any stock that's not on that poll that you'd like to see covered, put that in the chat box as well, and we'll do our best to get to that. But look, Jimmy, a couple of other factors that we're observing quite closely is the iron ore price, the oil price, and the bond market too. What do you see happening there, or what have you observed?
Pretty much, I think I could see Michael's question as well. So BHP, how low can it go? It all is based on iron ore right now. So if you bring up the iron ore chart, okay, it comes down to, it looks like it broke around the 850 mark, 860. That's one as well. So it's at 780 right now. So it's still looking slightly bearish as well. So that's where it's at. The other thing is, Michael, you have to take into consideration as well at the moment. What usually happens, guys, what you got to sort of understand in this sort of period as well, when it comes to reporting, we have got dividends. Okay with that? So BHP is going to pay a dividend in March. Okay? So after the dividend is paid, obviously if you're a holder as well, you have to wait another 6 months to receive another dividend. Okay with that. So usually you find that people start sort of selling off, okay, the shares, depending on where it is as well, and away we go. So iron ore has played a big factor in your BHP. It's played a big factor in Fortescue, and it's played a big factor in Rio as well. So obviously, BHP hit $50, and all of a sudden now it's back to 43, I think it is today. So pretty much, obviously, I wouldn't be surprised. It's sort of getting into that sort of support level, okay? And away we go from there. So it might even touch that 40 sort of level as well. So I think it's around 41. I think it is the lower level sort of thing, somewhere there. But $40 is a target as well. And as I said earlier on, Michael, if there's no div and iron ore keeps falling, is there any reason to be buying BHP? To me, the answer to that is no as well. So that's what it's at. Now, if you start seeing iron ore start ticking up, if Blake can bring up the iron ore chart.
I don't have it, unfortunately, today.
Oh, Jimmy. Okay, cool. No, that's all right as well. So pretty much, obviously, what happens is the iron ore chart, you need to sort of start seeing, some, turnaround as well. So look, I don't know how a lot of people trade as well, and I can sort of share the way I sort of look at it as well. Do you know what I mean? So on a technical sort of front as well. Okay. Probability is going up in June. Yeah, you're probably right, Michael, as well. Reason being is you probably start. What actually happens, guys? The trick to trading is, okay, and I think Ingrid could sort of vouch for this as well. What you'll find, guys, you have to start every year at the start of the year. One thing is the most important thing you need to do. Okay with that? If you're going to be trading 10 stocks, you need to know their reporting dates, okay, and when sort of the dividend's going to be roundabout. Does that make sense, guys? Okay. Put it in your diaries, put it in your phones, whatever as well, because that's obviously critical. So then what you do, you work backwards. Okay with that? Usually what you find is a lot of stocks, okay, start moving around 50 days beforehand. Okay with that? For a dividend run. Reason why they run 50 days beforehand, because if you hold the stock more than 45 days, you're entitled to franking credits. Okay with that? So people want to get the dividend plus the franking credits as well. So that's why that's very super important you understand when it's reporting. So BHP reported, late Feb, okay? And it's going to report obviously late August. So the dividend will get paid around September. Yeah. So going on, Michael, what's thinking is, you might sort of get that sort of June, July sort of period. If iron ore sort of stops and starts pushing back up, you'll probably start seeing BHP start running up as well. Okay with that?
That might lead us on to Jimmy looking at BHP. We've had a couple of votes in from the polls as a stock to look at.
So if you make that sort of a little bit bigger as well, okay with that. So pretty much, obviously, that's fine as well, Blake. Yep, okay with that. So pretty much you had your run up as well, up to around $50. Yep, okay with that. Guys, look, I don't know how everyone trades as well. Myself, I've learned over the past, right? I try and keep it as simple as I can. Okay with that? So what I do, guys, as well, and this is probably, I don't know how you sort of trade as well. The two things that I need to identify first is resistance and support. Okay with that? On the chart. Yep. And the other thing I need to consider is what's the trend. Okay with that? So pretty much obviously a run up to the 50 mark as well, we had a bullish run. So how you determine a bullish run is previous peaks and obviously higher troughs as well. So we had that higher peak, higher trough, higher peak, higher trough. Okay. And then all of a sudden we had a pretty much a peak. Yep. And then what it did as well is we had a lower peak. Yeah. As soon as we had the lower trough get broken, which is around just before, that one there. Yep. Okay with that. You knew the bearish trade was on. Yep. And following through as well, if you bring up the iron ore chart, you'll see that obviously, that showed that obviously iron ore was falling. Okay with that. So it made sense to go short BHP. Okay with that. Now that was obviously that's one way. That's the way I trade as well. Okay. Other people use indicators. I find when I use too many indicators as well, guys, I sort of, put myself away from trading as well. So I just follow simple rules as well. What does BHP do on a fundamental? Okay, we know it does iron ore. Okay, if iron ore is falling, I'm not going to go long, am I? You know what I mean? And vice versa as well. If it's sort of falling, I'm not going to go long on the stock as well. So that's where it's at. Yeah, everyone okay with that? So pretty much that's the way I sort of look at it. So it's been in a sort of a bearish phase. So now for me to go long BHP, okay, I need to see a higher trough and a higher peak get broken. Yep. So you got your support level here. Yep. So you need that sort of peak, which is around, is it 44, Blake?
45.
45, yep. I would need to see 45 get broken on the upside, okay? And hopefully I get a high trough as well. Does that make sense as well? The other thing also as well right now, guys, I need to see BHP iron ore price stabilize and start pushing up as well.
Yep, right.
Until that,
yep. Maybe Jimmy, I think that's really helpful. I guess, like for an options trader, once you see these, or for a short trade, once you see these lower highs and lower troughs, what would you look at next when you're ready to go short?
All right. So right now, as well, guys, what I'd want to see is obviously, let's see if it goes retest that previous trough or even support. See, right now support's running at around 43. Is that right? A little bit higher, Blake.
Yeah, I've got the 43 here, and maybe a 41.50-ish below that.
Okay, cool. All right, so 43 is your first sort of target on the long. Okay, so let's see if it goes to 43. Okay, if it forms another peak there, okay, I know I've got a target down to 41.50. Yep, okay with that. So the plays, the main thing as well, you also got to watch is, which would have been good as well, is if we could bring up the iron ore chart. Okay with that. If the iron ore chart is showing a bullish sign, I would probably not take that trade because it's sort of close to a support level now. Does everyone make sense with that? And this is what I said to you from the start. As soon as I do my charts, the first thing I do is actually put my support and resistance, and then I just watch the peaks and troughs. And then I look at what the stock does, okay, which is iron ore, okay with that. So I look at the iron ore chart. Does that make sense, guys?
Yeah. No, that's great. Thank you. So it feels like it might be in a little bit of no man's land.
A little bit of a channel right now. So right here, you'd be sort of nervous going either way, okay with that, until you see a clear break either way, yeah? Now, if it does another peak, let's say closer to 43, you might sort of want to look at another, or even a little bit higher, 44. You might want to see a short because you've got a target down to around 41.50, as you probably gather. So that, obviously in option trading, $1 move, $2 move is a massive move in options as well. Yeah.
Yeah. Great.
Now, right now, guys, I would be playing depending on what, volatility is doing as well. You want to sort of look at, obviously, Shorting, I don't know how you short as well, guys, as well. Personally, I like to do trades, you know what I mean, that obviously coincides with volatility, okay? And this is why the website is fantastic, guys, because it sort of lets you know what you want to do from here. Yeah.
Yeah. Well, maybe let's have a look at BHP's volatility.
Yep.
And maybe we could replicate a trade of if we're
Yep.
back in time 2 or 3 weeks and we saw the break of the lower trough,
Yep.
what
Okay.
that might look like.
Yep, no problem.
So I'll just go to the watch list and put in BHP.
Yep.
And the volatility chart is here.
Yep.
So IV rank is sitting at 37 at the moment, with the implied volatility about 22%.
Yep. So that was like 2 weeks ago.
2 weeks ago was, about the same, about 20%.
Yep.
So it seems like it's a little bit lower than where it has historically been over the last period of time. So it
Correct.
probably makes sense to look at a debit strategy or be net long premium, as the premiums are cheaper.
Yep, correct as well. So pretty much, obviously, you look at a debit spread here. That's what I'd be looking at as well. If I was obviously shorting it, so I'd be looking at pretty much, obviously, depending on how aggressive you want to be, but you probably want to look at a 43, 41 spread.
Yeah, cool. So like a
Yep.
bear put spread.
Correct. Yep.
40, 43, 41. And how much time would you give yourself for the option to play out, Jimmy?
Depends how it is as well. It depends on the cost as well. But obviously, look, if iron ore was falling quickly, I'd probably give myself at least a month, 2 months. Okay. I like to do a bit more longer term myself. I like to try and give myself at least 3 months sometimes. Barring the cost as well. What I find, guys, as well, just be careful with options. The last sort of 2 weeks as well, they deteriorate pretty quickly as well. And if you get the wrong move as well, you're playing against it. So that's where it's at as well. So I'd give myself at least a month, ideally your 2 months as well on the trade, and away we go.
Yeah, great. And it's probably subjective, but if it does go against you, if the momentum changes, and you've got this position on, how would you try and manage it?
Okay, cool. All right. So my sold legs at 43 and the bought legs at 41.50. Okay with that. If you go back to the chart.
Oops. Okay.
That's right. Okay. What level, guys, do you think I would flip it over into a bullish trade? Just wait 10 seconds.
See if anyone answers.
Yeah, let's see. There we go. Got to wake them all up. Yeah. Support. Now, remember what Blake asked. The question that he asked Michael was, when do I flip over if it's going against me?
Would you be looking at the peaks and the troughs, Jimmy?
Well done, Blake. Yep, correct as well. So pretty much at 43, your previous peak was around the 44.50 mark, correct? Wherever it is, that's yep. Yeah, just there. Yep, okay with that. If it breaks that, guys, does this show that there's a bit of strength coming back into the stock? Okay with that. And I've got a higher peak and a higher trough. So that's where I'd be flipping over into a bullish trade. Does that make sense? Yep. But also, for me to turn it bullish, I need one other thing, guys. Does anyone know what that is? Yeah, 45. Yeah. What else do I need for me to turn bullish as well? What does the stock do, guys? Well done, Ingrid. Yeah, you need iron ore to move up as well. Yep. Okay with that. If iron ore is falling, guys, do I go long? Correct. Well done, Belinda. Well done, Ingrid. Okay with that. Yeah. It's irrelevant what the candles are doing at that stage, because obviously if iron ore is falling, eventually what's going to happen is the stock's going to follow. Yep. Everyone okay with that? excellent. That's when I turn the trade around. So if I know stop, pushed up, okay, that, and it's breaking the 44.50 mark as well, or 45, you go long. You turn it into either a bull put, or you, so you take out your sold leg at the bottom end, and then, or just get rid of your puts. Depends on how you sort of structure it as well.
Yeah. Great. I think that's very useful. Thanks for sharing that, Jimmy. I might move on to the next stock if you'd like.
Yep.
Probably the other stock that's getting a bit of attention is Woodside. So we can have a look at Woodside. I know that's one that you've been following yourself.
Yep. Been the most frustrating stock in the market for me, personally. So yeah, I don't know. Everyone that knows me, I've got a love affair with the oil stocks personally. So I like Woodside and Santos. So I don't know. Anyway, so this is a bit of a tough one for me, and maybe I've got a bit of a a love-hate relationship with it at the moment, personally. So we'll wait and see what happens. But look, obviously, right now, guys, as well, is at the moment, Woodside is not making clear sense. Go with that. Reason why I say that as well, guys, is what does Woodside do? Which sector is it in? Anyone? Energy, yeah, meaning oil and gas. Yep, go with that. Now, what's the price of oil been doing?
It's been going up, hasn't it? A nice
Yes,
run this year.
It's been rising. It's over $80 right now as well. So why isn't Woodside following? Yep, I get. Look, gas has been falling as well, so I get that as well, Peter. As well, so I'm not going to obviously get bar. Woodside has been falling pretty heavily as well. Yep, go with that. Now, there's two factors here as well. Okay, so same sort of thing applies. Okay, Woodside reported. Okay, they paid out a div. Okay, I think they paid out a little bit extra to what the market was expecting. They paid 80% of their profits out. Okay, which was a bit surprising. But that usually is a sign. Usually, when they pay a high div, that's usually a sign that they're expecting next year to be a bit more better as well. You understand? Because obviously, when you find that stock companies pay a bit of a less of a div, okay, that's usually a sign they're sort of worried about what the future holds next year. Okay, with that. But for me, right now, guys, so the setup would be I would go long here. Okay, with that, and that's what I'd be looking at. Yeah. If oil sort of looks like with the unrest that's happening in the obviously Middle East, okay, I would be looking at a long position as well, right here as well. Now, the problem that you got right now, guys, is depends on how you trade as well. Okay. Now, the way I sort of trade as well, right here. Yeah. Now, two factors here as well. The trend right now on the stock is what?
It's bearish, making
Bearish.
lower highs and lower lows.
Oh, lower peaks and lower troughs, correct as well. So for me right now as well, I would want to see the same trough, which it's doing right now. Okay. Personally, I would, yeah, it is sideways, but see it's sort of hitting that sort of double bottom. What I want to see personally right now, if you want to go long, okay, you want to see a higher peak right now as well. Yep. A higher peak and a higher trough. Yep. Yeah, triple bottom. It might be. Yeah, go with that. Now, if you're going to play, obviously, look, sometimes depends on what oil's doing. Okay, that you might want to play, obviously, break all rules as well and go long. It's up to yourself as well, how you sort of want to play it, right? So if triple bottom's one of your targets, okay, that you might want to play at the support level, okay, with that. But if you're going to do that, guys, right now, the trick to me that I find as well, you need to give yourself some time. So I would be looking at least 3 to 4 months out. Does that make sense? Just in case the triple bottom gets broken.
Sure.
Because if this breaks right now, personally, it could go at least to 26. Well, first target will be around 28, yeah, and then you probably got 26 worst case. Go that. Yeah. If you want to play that far, Michael, as well, what you got to sort of understand as well, another trick would be is it's reporting in September. Okay with that. So you might want to play here as well. Yep. Yeah, good question, Ingrid. I was going to cover that as well. Yep.
Yeah,
Okay.
so maybe let's put
Yep.
a trade together and have a look at
Yeah,
that.
no problem as well. So let's say it all lined up right now as well. Depends on how your trading is right now as well. So if you take a bit more of a 6-month sort of view, or a 5-month, or a 3-4 months, okay, you might want to play the triple bottom, okay, with that. But just be mindful as well. If you're going to play against the trend, what type of strategies should you be looking at? Anyone know? What you got to be looking at, guys, is always you got to be doing, if you're going against the trend, no, you got to be looking at spread trades. Okay, with that. Why I'm saying spread trades as well is because if the support gets broken as well, at least you've got a sold leg that covers you a little bit. Does that make sense? If you're going to go against the trend. Yep. So spreads. Yep.
Make your risk as low as possible.
Correct as well. So all you got to know your risk straight away before you go into a trade. That's another key to trading as well. Yeah. Now, Blake, I'll pass it over to Blake as well here. Yeah. Why don't you just big cheap calls? Because you might just be giving money away, Pat. Does that make sense? Because if it breaks $29 where it is right now, what happens next? It goes to 26. What are those calls going to be worth?
Yeah, you need to either go super far out the money to keep your cost low, which means the probability of it going up that high is quite slim, and you need a really big move to make money.
Correct.
Otherwise, like your risk is a lot more because you're not financing the bought premium.
Correct. Yeah, correct. And the other thing also is, obviously, if you're doing spread trades as well, at least you've got a bit of a hedge in play. You can always turn it around. Yeah. It does cap it does cap it as well, Pat. But understand right now, are we going against the trend of the stock? So the answer to that is yes, because obviously right now, if you know the call, yes, you will make money quicker, okay, and you will make much more than what I will make, 100%, right? Okay, no problem with that. But if I get it wrong, at least I know my loss isn't as bad as what you're going to take. Does that make sense?
It probably also depends on how confident you are
Correct.
in the direction as well. Like it might be worth just buying calls if you have more confidence, or pricing it up in a way where the premium on the calls a little bit further out might be the same maximum risk as a closer spread trade.
100%, guys. Look, I'm not going to tell what the right and wrong answer is to trade. Okay, it just depends on your risk level. Okay, with that. So some of us are more riskier in here, some of us are more conservative. Myself personally, if I'm taking a long position, I'd be taking a spread here. Okay, with that. But it comes down to what people want to do as well, right? But for me right now, I'm always looking at worst case scenario. If it goes against me, okay, how do I protect myself? Does that make sense? Yep. Now, if you're going to play a long dated call out of the money, that's fine. But if you're going to try and sell calls against it, options have options, correct as well, yeah. But obviously what you'll find is when you try and sell something against it, okay, with that, the premiums are pretty low as well. So you're pretty much obviously writing it off. Yeah.
Yep, great. Well, let's have a look at a trade then, Jimmy. I've just brought up the implied volatility chart of Woodside over the last 9 months or so, and it's like obviously you can see here it's been very choppy, and we've had big spikes in implied volatility. I guess at the moment it might be a bit of a 50-50. It's sitting kind of in the mid-range. Like IVR of 26 is probably just an indication that it might be on a slightly low side compared to where it has been. So it might be worth buying premium, being a net buyer of premium than a net seller.
Yep.
But obviously, it really depends on your own trading strategy if you're more of a debit trader or a credit trader too. But I think for the sake of this, probably a debit trade would make sense with
Awesome.
where
Okay.
volatility
Yep.
is sitting.
Yep.
Um,
Hang on, before I'll just answer Peter as well. So why not wait for confirmation? I did say that from the start as well, but if you do want to preempt as well, Peter, okay, you want to give yourself some time, okay, with that. I agree with you as well. I like to have a high trough and a high peak personally, okay, with that. So that's me as well. But obviously, some people try to support resistance levels as well. Yeah. Does that make sense?
yeah. So we're at the double bottom here. And probably
Correct.
like from a safer perspective, you like to see it break the 31
Correct.
level and then lock in a trough.
Yeah, correct as well. So if I get a high trough, I'm in as well. But look, the thing is right now, why I'm not sort of obviously uncomfortable with not putting a trade here as well is because oil's jumping out. It's over $80 now. You know what I mean? So eventually what you'll see is they're going to come to these stocks as well. When the market sort of sentiment sort of, picks up again, you're going to see if oil keeps going and rising as well, you'll see WDS and Santos move quickly. Does that make sense? On the upside. But it does get me nervous right now as well. So I get your sort of point of view right now. Oil's been going up, but WDS is not going up. Yep. So that makes me a little bit nervous as well. Do you understand? So that's why I keep saying to you, personally, you'd want to see a higher peak, higher trough. Yep. Correct. Well done, Pat. Yeah, you picked up on that as well. Correct as well. What happened is NST wasn't moving with gold price, okay, and then all of a sudden gold broke that 2100 mark, and then golds just went bang. So gold stocks NST went from around 1270 up to around 1430. Correct. Yep. Evolution did the same. NEM did the same. They all did the same. So all gold stocks did follow. Yep. Yep. Yeah, they're all the same as well. That's the thing as well. It's frustrating as well. I get it. And this is why obviously where Blake's coming from as well. And this is why I said to you earlier on, if you're going to do this sort of trade right now, you've got to give yourself some time. Okay. So let's just go through, let's say we're looking at a spread. Okay. With that, I'd be looking at a bull call spread, okay, just based on where volatility is, okay, with that. So I'd be giving myself at least, out to June, even July. Let's price up a July one, Blake.
Yep.
Now the levels
where would you put the strikes? Close to the money or a little bit out?
Yeah, it depends. I'd probably put it slightly out. So let's say it's trading at around 29.40. You might want to look at the 29.50. 32.50 maybe. I don't know. It depends on where I get sort of obviously a sold leg. Yep. What I like to do with a sold leg, guys, as well, I like to get at least more than 10 cents. Okay with that. Anything under 10 cents is not worth selling, I think personally. Okay. Because if you take into consider costs and everything as well. So that's one of my things as well. But 29.50, 32.50 maybe. What's that pricing up at?
Yep. So we've got a $1.10 debit. And the sold legs at 60 cents.
Okay, 60 cents as well. So if you want to, obviously, if you that bullish, you might not want to sell the 32.50. You might want to take it high up to 33.50. Okay. Another little trick, guys, is all you want to look at as well is if you look at the chart, where's its next resistance? So you might want to put the sold leg there as well. So yep, so up there. Where's that one, Blake?
This is at 31, the previous peak.
Yep.
And then we're up here at 32.
Yeah, correct. So 32.50 is fine. Do you know what I mean? So that's where it's at as well. So if you want to sort of be a bit more conservative, you might want to do 33. I don't know. You know what I mean? It just depends on your sort of strategy. But it comes down to how much money you want to put in as well right now as well. Okay with that? So that's what I'd be looking at. So I'd be looking at around the July sort of period right now. Okay. That gives you time as well, guys, as well. So for the trade to sort of work. And as you can see, the payoff diagram, if it moves higher, away you go.
Yeah. Yeah, no, absolutely. And it's I guess it's one of those things that, based on your level of confidence, you can play around with, what your maximum loss is going to be, and your risk to reward ratio as well. So, like have a play around on the system by changing the strikes and changing the expiry dates, and you can, kind of put together a trade that you're happy with the maximum risk and and if it goes your way, you can cash in as well. So
and
yeah,
this little website's fantastic, guys, as well. And this is why obviously you guys are all members here as well. But obviously this is why it's actually the best thing as well. So you can sort of price it out to you. Some people would probably play the 30, 33 level. I don't know. Depends on where you're at. What I find, I like to go if I'm going longer dated, I like to go slightly out of the money, just slightly as well. These are another reason why I like to go slightly out as well. Okay. And I think we'll cover it right now as well. But obviously, if it breaks that 29 level, what do I do here, guys? So if it breaks support, guys, what do I do?
Are you wanting to go short? Reverse your
correct.
trade?
You got to turn it bearish right now because your next target might be your 28, and then worst case, it might go to 26. Does that make sense, guys? So what I'll do is I'll come in and sell calls against it. Does that make sense? Yep. And this is going by what Peter said as well. Why not wait for confirmation? Yep. Yeah, I'll sell calls depending on how I want to do it, Michael, as well. I might want to come. No, I wouldn't do naked. No chance naked. Yep. What I would be doing is selling calls. So either, lowering my 32.50 call down to maybe, 30.50 if I want to do it that way. I go that. Or I go, if I think it's going further down, I'll turn it into a bear call spread. Basically volatility and all that's all okay. Does that make sense?
Right.
So all I'm doing there is I'm trying to protect my capital as well. So I've put in $1 in, okay? I need to get my dollar back in theory. Does that make sense?
Yeah, no, very good. Thanks, Jimmy. I think we should cover one more stock today.
Yep, no problem.
Let me just have a look at the polls. We got a couple of single votes from a handful of companies. I think maybe an industry that's probably relevant is a bank.
Yeah, correct. Yeah. Mm-hmm.
Do you have a preference on a bank you'd like to have a look at?
People that know me, I like ANZ and Westpac, but let's have a look at CBA, everyone's favorite. So there you go.
Sure.
Okay, so first question is right now, guys, what's the trend on the stock? Up or down? Couple of minutes. Yeah. Up for Michael. Yeah. Anyone else? Just wait for one more. Bullish for Ingrid. Correct as well. So you've got higher peaks, higher troughs right now as well. So looking at a bearish trade right now, would you look at okay, so Peter said down as well. Okay with that. Why do you say down, Peter? I'm just curious as well. And Eastway is bearish. Yep. Okay with that. Yep. Just curious as well, because obviously I understand people have got different trading methods. So I'm not, I don't know what right and wrong is, but based on the way I trade, okay, you've got a bullish trade, okay, with that. Until the key to this right now, guys, is what? Which level? Yep. Yeah, long-term correct. Yep. Okay, so Peter's saying overpriced. Yeah. I don't know if that's a trading rule, but anyway, there you go. Yep. Yep. So Blake sort of brought it up as well. That previous trough, which is that support level. Yep. If it breaks that level, guys, you could have a bearish trade because then you've got obviously a lower trough. Yep. Yep. And away we go. Until it breaks that as well right now as well. The problem that you got right now, trying to short it. Yeah, look, at 120, I know it's pretty up there as well. Now, look, personally, myself right now as well, because I do valuations on stocks as well, okay? My valuation on the stock is much lower. Yeah, okay with that. But it doesn't mean that it's going to that valuation, okay? The reason why I say that as well is because people look at right now is where can I put my money to get some returns? Does that make sense? And the impending rate cuts as well, okay, I'd be very careful as well. And that's why I'd sort of be looking at. And this coincides with what I've been saying. You need to look at the sector that it's in as well. So if they're going to cut rates, Okay, with that. You got to be careful as well, obviously, because this will go higher as well. Okay, with that. But yeah, correct. Everyone's picked up on it. 112 is the key level right now. Yep. Yep.
Yeah.
Okay. Yeah.
I was just going to ask Jimmy, like CBA is a good example because it's had such a bullish run into
Correct.
this new year, and it's probably easy to say that it's a little bit overpriced at the
Correct.
moment.
Yep.
How much does that play into a factor around your momentum trading when you're looking at the trend?
With momentum right now, I would want to see a lower peak and at least a lower peak. And then I would like to see a lower trough. So that 112, I need the 112 broken. Yep. Unfortunately, yeah, look, personally, my target on the stock is obviously my valuation target is 105. Okay with that. So obviously that's where it's at. I get it as well, Peter. Everything doesn't make sense as well, but you got to understand the whole market is like that. Yeah. I agree. One day we are going to get, and I was going to cover it later on as well, but obviously one day we are going to get the biggest short ever. I get it. Yeah, no problem. But you just got to obviously follow the macros right now. And the market, it just keeps going up. Go with that. But 112 is the key level right now. Yep, everyone okay with that? So for me right now as well, what you've got to be watch this space right now is, let's see, if it goes back to 112 and bounces up, okay, there is a case you could stay on the bullish side. So my problem with CBA is I know my valuation is at 105. Okay, how can I go long 112? I get it. You understand? And that's where I'm having the problems as well, like Peter has. Yep, go with that. But other stocks, you find that investors, they're looking at obviously the return. They know they're going to get a dividend. They all increase their div. Yeah, with rate cuts coming as well, how are the banks going to suffer? Their bad debts. There's no bad debts as well. So bad debts going forward is going to be positive. Yeah. Go with that. Net interest margins where they make their money. Yep. Okay. Are going to be positive, even better. So how can you short it? You understand? I get it. Yeah. I get both sides, but for me right now, I would rather play the obviously long side as well at this stage. Yep. Now, if you want to go forward, depends on how you want to look at it as well. Maybe Blake will go into the volatility sort of stuff. Okay with that. So let's say we're looking at a trade. Yeah.
Yep, let's have a look at CBA.
Michael, how I came up with that number is because I do valuations. I obviously analyze their balance sheet. Okay with that, and I look at everything as well. Okay, and away we go. Yep.
So implied volatility on CBA is probably traded or probably been around this level for the last year or so. 15, 16%. Obviously spikes around factors. I guess from understanding the premiums of the options, I don't think there'd be a favor per se. Like you could make a case for buying premium or selling premium.
Okay. Yep. Okay with that. Yep.
So if you're looking at doing a debit or a credit trade, I don't think it's there's one side or another on that sense.
Yep. Okay, so pretty much obviously depending on where you think as well, but for argument's sake, you might want to look at it. If all goes right and RBA changes its tune next week, and then obviously that it potentially could go back to 120. Okay with that, so you might want to look at a bull call spread. Okay with that, and same sort of thing applies as well. If I was going to do that as well, look, I know there's a potential of breaking 112, so I get it. Okay with that, so that's with, but I'd be looking at similar sort of setup, maybe a July sort of trade. Yeah. For a bull call spread. If I was going to do it, okay with that. Look, CBA is one of those tough ones for me. Okay. I always wrestle with it on the hard side. Okay. Yeah. So if I was looking at it right now, it's trading around 114. So I'd be looking at maybe a 115, 120 bull call, maybe out to July. Even August as well, because I know it's going to pay a dividend in August, and usually you get that 50-day beforehand. Okay, let's just do July. Just keep it consistent with the other one at this stage.
Sure. Yeah, so I've put the call at 116 for July,
Yep.
and
And
the short call at 120 for
yep,
July, and it's $1.75 to enter,
yep, yep.
and $2.25 to profit from on
Yep.
max profit.
Yep.
Does it make sense to, when you're doing a spread like this, Jimmy, to have your sold leg at a key level?
I like to do it at a resistance level personally. I go with that. Or a obviously support level, both ways as well. The other factor is you could probably move out the call a little bit further out instead of 122. What you could do if you think it's a double top, you could turn the whole trade into a bearish trade. You can make it into a bear call, depending on how you sort of strategize as well. But for me, look, if CBA right now for $1.80 trade for a $4 trade, I don't know if that sort of makes sense for me, personally, right? I know I'm trying to not talk myself out of the trade, but I'd probably want to get $1 for a $3 spread. You understand? So that's where it's at.
Yeah, cool. And I guess probably something else, Jimmy, is for a trade like this, say it does go in your favor and you've
Yep.
got, we're out to July, 125
Yep.
days, and we see a quick move to the upside in favor of this trade. Would you think about, closing it out early, or do you have a process in place that
Yep.
where you can take profits?
Funny you say that, Blake. The golden rule in trading is what? Take profits. That's the golden rule in trading. So if you got a nice profit, you take it. Yep.
Yep.
And then the other trick is don't look at CBA for a day or two. No, I'm only joking. So there you go. Just in case it goes again. So there you go. But always take profit, guys, as well. You're not going to go broke taking profits as well. I know you've heard it 50 million times as well. That is the golden rule in trading. Go with that. That's it.
Yeah. No, good to know. Absolutely.
Okay, Pat's asked a question. What do you look for in balance sheet? The things that I look at, Pat, is obviously three factors that I look at. Net interest margins, okay, if they're doing well. Bad debts, are they increasing? And the other one I want to see is dividends. Yep. If I see buybacks, that's a sign that they're actually more positive for next year as well. Does that make sense? Pat, if I have it within a day, I'll take it. If I have it within, that actual day, if I get a 20, 30% profit, I'll take it. Does that make sense?
Yeah.
So, yeah, look, I get it. You can let your profits run. The problem is, as you guys know, in traders, okay, I've been trading for 24 years, okay, with that. The worst trades are the ones that you've had a good profit, okay, and they turn into a loss, okay, with that. And that is one factor. It's called greed. Go with that. So that's where it's at. So for me right now, guys, always take profits. Yeah.
Yeah. And it's a great position to be in because you got the move that you're expecting.
Correct. Yeah.
And that's a perfect scenario if you can take 20, 30% in a couple of days, Jimmy.
Yeah, that's what you want as well. That's what you're looking for in trading. Okay, with that. And that's about it. Like, think about it. Sometimes the stock only moves, 2-3%. You know what I mean? So if you're taking a 20-30% trade overnight or 2 days, it's good return, guys. Yeah. So obviously that's where it's at. Yeah.
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 Right.
Yeah.
Very good.
There's no general rule, Pat. There's no general rule. Yes, Michael, Bitcoin, yes, it's good to trade as well. Bitcoin can move 10% in 3 minutes. Okay with that. So it's one of those things, but it is a good trading. You can get flushed, by 10-20% within an hour or two. So that's where it's at. Yep. Could you do an example of a bear put spread, the setup and the exit strategies? Yep, no problem, Linda, as well. So we're looking at CBA. Is that what you're looking at? Yep. Okay. I gather it's CBA.
Yeah, we'll have a look at CBA. Yep.
All right, cool. So the key level right now is 112. Okay. So, let's say breaks 112. I'd be looking at a setup, maybe, same sort of setup as well as, what we're looking at July. Okay with that. Oh, okay, cool. Yeah, let's look at CBR. I'll just tell you how to do it as well. So obviously, support's at 112. Okay with that. So what you do, you buy a 110. Yep. And you sell where the previous support is. So puts.
Yeah, I'll just look at the chart and have a look at previous support.
Yep. Or
we kind of got
just
10. Oh, yep. 106.
Yeah, 106. Yeah, so 110, 16. That's fine. Now you realize, look, obviously with the more time you buy, the more expensive it is. I get it. I go with that, but at least it covers you as well. So that's what it's at.
And you have more time for the trade to go in your favor.
Correct. Yes, correct as well. Yeah.
Yeah, so I've just put this trade together. So buying the $110 put for July, and then selling the $106 put for July as well. Costing you 90 cents.
Yep. So potential for a $4 trade. So that's actually a pretty good return.
Yep.
Yeah, if you're looking at, obviously you're paying 25% to get in. So you take out 75. That's not bad. Yep. Usually, guys, and this is probably, I know this is not the hard and fast rule as well, is, okay, what are they telling you about the market? Are they expecting more bullish or bearish? It can change, I get it, but yeah, look, to me, the calls are more expensive than the puts at this stage.
Yep.
Yep.
Absolutely. I think we've run just on time, Jimmy.
Awesome.
It's good to get 3 stocks on a bit of a deep dive to see, how you go about things and how you trade them. Seems like we've got a bit of interest for some other stocks as well. So we might have to do a part 2 of this in the next week or so.
Yeah, no problem as well. So we'll try and reconvene again next week as well, or the week after. So whatever suits you guys, and we'll work it out as well from there. So no problem as well. Yep.
Absolutely. So, thanks again for everyone that's tuned in today, whether that's live or watching the recording at a later stage. Any feedback for us would be great. I think, these sessions are well received in the fact of, actually going in and having a look at how trades do work and what we look for within the markets too. But, any feedback or suggestions, let us know, and happy to take that on board. And thanks again for your time today, Jimmy. It's always great to pick your brains around how you go about everything, and hope we're all on the right side of the market.
Yeah, that's the thing as well. So take care, guys. Happy trading for everyone. And good luck. Speak soon. See you guys.
See you. Bye.
Bye.